Hello, everybody. Another good day to everyone. For the past few days, we've been seeing a lot of volatility in the markets. And to be fair, including myself, a lot of people are wrong when it comes to the market movements. All right. I'm just grateful that because I've not touched my portfolio over the last couple of days, it has gone down and it has slowly recovered slightly more than half of the losses that I have suffered from for the past week, right? And of course, one of the things that you observe about the talking heads on social media is that a lot of trainers and guru types, they would come out from the woodwork, right, to showcase some of their genius traits, right? If you had basically bought at the bottom of the market after the tariffs are being declared, the next day when the market recovered, right, it's very easy to call yourself a genius. Alternatively, if after the next dead cat bounce, you sold some of your counters, then as the markets were to go down the following day, once again you can declare yourself a genius, right? Um, but in the markets that we currently in my opinion, uh, there shouldn't be any gurus and there shouldn't be any gundus, right? I think the only thing that matters is over the long and the medium term, how good you are at reading geopolitics, right? So this is exactly what we're going to do today. I'm going to explain to you some of the first principles I use to look at geopolitics. I'll explain to you why it is so difficult for even experts to do this, okay? And then you judge for yourself whether you agree with my analysis or whether you can go your own way and make your own predictions, all right? So let's go. All right, so episode 5 is where I attempt to predict what's going to happen, right, with the Trump tariffs, okay? And let's begin with a more abstract and theoretical discuss principles behind the idea that I'm sharing with everybody today. A little bit challenging if you are used to videos that talk about what stocks to buy, right? I'm going to try something a little bit harder, right? More intellectually challenging for you. And I'm going to talk about this book called Geopolitical Alpha by Marco Papic, right? And it's a book on how we can use political insights for financial gains. Okay, and in this book, Marco Papic introduces the concept of dialectical materialism. Okay, this concept came up from Karl Marx. And you find that a lot of leftist intellectuals like Karl Marx, like David Graeber, like even Thomas Piketty, right? They have a wonderful toolbox that retail investors and capitalists can use to actually make more money, all right? Which is why I'm actually a very big fan of these left-wing intellectuals, okay? And the idea of dialectical materialism is that it asserts that the material world, right, particularly economic conditions, they drive social and cultural change, right? So we have to reject idealism and we have to emphasize the continuous transformation of matter, right? Sounds very abstract, very cheap, right? Now, what does it actually mean? It means that if we want to observe Trump, we have to ignore his MAGA ideology to determine what's next. Instead, we need to study what is Donald Trump's constraints. They could be political, they could be economic, right? Okay, so all this is highfalutin, right? High and mighty. How do we actually do this, right? We are retail investors. We might not have all the data, right? But what we can do is to pick out particular examples of articles being written by professional economists and see whether they follow this idea of dialectical materialism. And then we can then predict and see how good, right, their predictions are. Okay? And very fortunately for this particular tariff event, in the Edge magazine on the 11th of April 2025, there was a very significant discussion on Trump. Okay, and in one of the articles by Tong Kui Ong and the Asia Analytica, I think his economics arm, has a very good article on what they believe is going to happen next. Okay, and they've shown the working to us, which I love, right? Because if you know how a person thinks, then you know how to apply this for future events, right? And in this article, which I'm going to summarize to the best of my ability, it's a difficult article to understand. The idea is that Trump tariffs succeed. Whether it will succeed depends on the elasticity of the supply of goods, right? And so where elasticity of supply is low over the short term, but over the long term, elasticity is going to be very high, all right? So let me explain what it means. If you are exporting, for example, machinery to the US, right? And suddenly the US erects a tariff, okay? Now, I can store the machinery in Singapore for a longer time, or I can ship it to Europe instead, right? It requires that my business development team were to make deals with other parties, right? So in that case, the elasticity of the supply is actually very high, right? I can actually shift my supply chain, right? But if I'm exporting, for example, perishable goods, like for example, chicken drumsticks, right? Chicken drumsticks, expensive to refrigerate. And so if the US were to erect a tariff, what would happen is I would find a way to still supply the chicken drumsticks to the US. And when I do that, I'm willing to take a loss. I will sell it at a cheaper price to overcome the tariffs. Okay, so that's what the Edge is trying to say, all right, which is, I think, a very, very logical kind of analysis on whether the tariffs will allow the Americans to get away with it, all right? So if you go with this analysis, then at its current high levels, based on the numbers declared on Liberation Day, the Trump tariffs are clearly negative for the Americans because the people who are supplying the goods to America to absorb all the tariffs at one go, right? And so it doesn't generate enough welfare for the Americans, okay? And so the article then predicts that Trump will walk back on the tariffs and declare victory as quickly as possible, right? So very strongly predictive. Article came out on Friday, Saturday, Sunday, these events actually happened, right? But something more disturbing for the reader. The article also predicts that the base 10% on all goods is something that the Americans can plausibly get away with as the numbers are low enough for every supplier to absorb some of the costs, right? So there is some bad news, right, from what the article is trying to predict. Right, so this is exactly what we're seeing so far. All right, the article has been spot on. Trump has postponed the full implementation of the tariffs. He's also carving out exceptions for specific goods like semiconductors, maybe some electronics as well as some cars. Right, this is the current state of the tariffs. Okay, right. So if you follow this train of thought, what's likely to happen next? Okay, so only if you agree with the article, right? And only if you agree with this idea of how to analyze the tariffs. Okay, so what is likely to happen is Trump will work with China to soften the tariffs. Okay, we just have to wait for the trash talking to end, right? The vice president needs to stop calling Chinese people peasants. Okay, and Singapore will find it very hard to negotiate the 10% away, right? And most of the 10% tariffs may remain for other parts of the world, which could impact world. Then markets rebound over the short term, but settle at a lower valuation over the long term as world trade is affected permanently by the 10%. All right? Now, if you then follow this train of thought and you agree with me, then you will agree that the People's Action Party and the Workers' Party coming into the local elections, they are not fear-mongering at all, right? The risk is very real, okay? And this has nothing to do with trying to exploit the situation for electoral gain, right? Especially the Workers' Party. The Workers' Party has no reason to actually say that this is not fear-mongering, right? Okay, so opposition parties who think that some parties that are exploiting these tariffs, I believe, in my opinion, are objectively wrong. All right. And finally, what does it mean for retail investors? The accumulation of Singapore stocks still looks quite fine. Valuations are quite low. As you can see on this wonderful table that I've done using my Python programming coding skills along with some help from artificial intelligence, you find that our local REITs if you just look at the blue chip level kind of REITs available in the STI, could be yielding north of 8%. And even the lowest yielding counter for a bank, OCBC, is giving a very delicious 5.46%, right? So valuations are cheap, and it is safe for investors to just nibble at the local markets. But once again, do your due diligence, okay? And let's not focus on the financial markets. Remember, let's focus on what I've taught you guys about geopolitical alpha. Thank you very much. If you like my content, subscribe to this channel. If you want to listen to my life story and figure out how the financial independence and retire early movement works, sign up for my course preview by following the link here, doc12.com ERM intro. You can also access that same link by Googling ERM intro and taking on the first link. All right, thank you very much.